Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis video is for Thursday, December 2nd, 2010. Well, folks, another rally on Wall Street is taking place as we see the spiders up $1.25 currently, again, into a little bit of resistance right around this 122.40, 122.50 level. We will cover that shortly. But bottom line is, as long as the global picture remains quiet, expect this market to be neutral to higher day in, day out through the holiday season. And that's what it comes down to. This is what we've preached to our members recently, saying, listen, if you're going to have something out of North Korea where they start to have a conflict with South Korea, if you're going to have major defaults going on in Europe, then of course the markets are going to take a hit because the Federal Reserve cannot control that. But the last 2 days, things have been quiet. The last 2 days, it looks like everything is perfect again. Sure enough, the market's rebounding. We are only about 50 to 60 cents away from the highs of the market this year. And again, those are unbelievable highs at 122.95 on the SPY right now. And we're only, again, give or take from the highs of the day, about 50 cents away. A fantastic rally again continuing today on the back of yesterday's rally. And again, very quickly, a few days ago, it looked like the world was ending according to the markets. Today, we're back towards the 52-week highs. Right now, the Dow up 90 points, NASDAQ up 22, S&P up 12. Now, a couple things to go over. First off, the dollar. This is the clearest picture of all, folks. Very easy to understand. We've said it before, I'll say it again. Dollar up, market down, dollar down, market up. They're inverse to each other. Notice the last 2 days, the dollar has fallen. What's the market done the last 2 days? Gone straight up, basically. So again, it continues to be true. And again, why? Well, because basically things in Europe are quieting down. The euro was taking a pounding, but as things quiet down in Europe, then obviously the euro gets a little bit of a bounce. When the euro bounces, chances are the dollar is going to fall against it, or as it should, and therefore the markets can rally. And it all comes down to currencies. As crazy as it is, folks, a lot of this is about currencies. Jobless claims this morning were not great. Came in at about 430,000 after last week's 410, 403,000, right around that lower 400,000 level. And again, the one good piece of news this morning was pending home sales up 10% or so. That was actually a good little tidbit of news. Market was already on its pace, though, based on the dollar. I mean, it all comes down to POMO, and I want everyone to remember POMO, P-O-M-O, Permanent Open Market Operations by the Federal Reserve. They will continue to prop this market up using POMO. What is POMO? POMO is basically taking QE2 and dividing it up day by day into amount of money, basically between $5 and $8 billion a day. They're using that money to buy treasuries from the institutions. The institutions then put that money into the market. Again, flooding the market with money pushes the dollar lower. And again, the market, the institutional players use that money to also push the stock market up. Very clear, very simple. It's been happening now for quite some time. We've talked about it for quite some time, and it continues to be that way. All right, USO is having a solid day today, up about 33 cents. I continue to think that this could go back to a double top on the daily chart. Quickly show you that double top up here. You can see a little bit of an X drawn up there. Right up there is most likely where you're heading. Then you'll meet a little bit of minor resistance up there. The GLD today is up 24 cents. Nothing major with the GLD. It just kind of floats higher. The reason why you're not getting a bigger bid on the GLD today, considering how much the dollar is down, is mostly because there was a lot of fear built into the market, which is a good thing for gold as well over the last few days. So over the last week, for instance, a lot of fear about Europe, so gold was going up even when the dollar was going up. Now that fear is subsiding, which is bringing gold down. It's basically being negated by the drop in the dollar. So again, fear declining brings gold down, dollar declining brings gold up. They're negating each other, and therefore you have a basic flat day on gold today. All right, understand that, folks. Very, very important to understand. All right, so again, dollar. Let's go back to the dollar chart. Continued fall. I was again telling my members of the Research Center and Intraday Stock Chat, look for a pullback on the dollar. That's exactly what we got. We told them that its cycle pivot date was right around the 1st and the 2nd of the month here. Sure enough, that's exactly when the cycle pivot date worked out to the upside. You can see just in the last couple days, we're basically up 350, 400 points on the markets, on the Dow, and again, nailed the cycle pivot one more time via the Friday video. And again, we're talking about premium videos at this point, where we tell the premium members of the Research Center and the Intraday Stock Chat what's going to happen. And again, in the daily market reports. So good stuff, continuing to see great trades. NEM was a trade posted on the Pro Trader watch list. Let me just quickly go over this one. We just pulled it off the Pro Trader earlier today, and sure enough, we pulled it off right near the highs of the day. Beautiful trade. Again, if you were looking at the daily, this is where we called it out. Little tail, bottoming tail picture right there, right on top of the 200 moving average. Look at the move since then. Beautiful. Where does it go? Right to the 50 moving average. You take your profits and run right there. So another great trade in the research center. The other trade was the JP Morgan. Take a look. This was your buy right down here, 37.15. The stock hit and we took it off today at 39.23 from the Pro Trader watch list. Another great bullish play right there. And again, this is the bottom line, folks. If you think the markets are going to fall into the end of the year, the only way that's going to happen is if you have major issues redevelop in Europe or in some other part of the country. As long as things remain quiet, which most likely will be the case until the new year, then look for the markets to remain neutral to positive. I mean, it's that simple, really. Again, yeah, anything happens in Europe, obviously, or North Korea starts doing something crazy, then the markets are going to dip because the Fed can't control it. It's all about what the Fed can control and what they can't control. They can control 99% of things. They can't control that 1% outlier when something crazy somewhere else in the world happens and it causes a rush to the dollar. The dollar then spikes and the markets will go down. Other than that, neutralish market bias to a slight positive continuing, although the last 2 days we've had some big upside, so probably stalling over the next Friday period. Could be a flat day tomorrow. All right. Let's see if there's anything else we want to discuss. I think the one small cap that I like right now is TIV. I give out every once in a while some of these small caps in these free videos. This is one I talked in the research center about and the chat room about. Low end here of the chart, nice double bottom. I love the double bottom range down here. The stock again is right there hovering just off the double bottom level. The one reason I like this, it's a oil play, it's a gold play, it's a moly play, and it's a copper play. It basically has exposure in lots of different ways, so it looks to me to be a very nice play, a good possibility of some upside, a good risk reward here. The only negative is about this company is that they need to raise a little bit of money, but for the most part, they could probably sell a property or do it in the right way where they'll be fine. Maybe a little dilution, but not much. I think it's already declined from about $1 up here. I mean, it was just $1 not long ago, so that's a great pullback. But the fact that it's an oil play, a gold play, a copper play, and a moly play, you have to think that it has enough exposure to really get some interest here at these current levels, and that's why I'm liking it in this general 50-cent range. All right, so keep an eye on it. I think it could be an interesting one for sure. Anything else? Let me just see here. What else do we have? The TORM had a fantastic mover yesterday. It's up again a little bit today. One stock I gave to the chat room this morning was SCOK. Nice pop on that one. Basically gave it out yesterday right in this range, right around 835. I gave it again today at 845, and it ran today all the way to about 890, 888. So good gains there. Another positive trade. That's all it's about, guys. Just looking for the risk reward, looking for the right hot sector to be in, looking for the right setup on the charts. Be on the right side of the trade and just continue to bank money. It doesn't have to be a lot. Sometimes they're small trades. Sometimes they're bigger trades. Yesterday was a 20% winner. Today, the SCOC, about 5%. But it's always about keeping the positive flow of money into the account, not letting it get away from you, not giving back, 20% via one bad trade or something like that. You know what I'm saying? That's the key. So again, the discipline, the education, and the trading expertise and guidance all in the research center. I do encourage you to join. Plus, we have the webinar this weekend. You take the webinar, you automatically get a free week of the intraday stock chat included, plus an outlook for 2011. Other than that, have a wonderful rest of the day, folks. I'll talk to you all tomorrow. Spiders continue to be hovering near the highs of the day. Very quiet on volume. The volume is dead today in the afternoon session. Again, everyone's waiting on the jobs number tomorrow. That's the way it's going to stay most likely for the end of the day. So look for that flattish day, rest of the day from this point on. Take care.